most of your trades are going to be basically trades that, you know, are over within a couple of hours. Then, and the big picture of things, right? It's good to identify the pattern, but at the same time, because you're intraday trading, it makes more sense to look for weekly cycles. Okay. So in the weekly cycle, if you can understand the weekly cycles and how they happen, you can basically help predict to yourself what's going to happen the next couple of days. And that could be increasingly helpful and most importantly, give you an edge. Because if you don't have an edge, then you don't have an advantage. And this shit's already hard enough to do without not having an edge or an advantage, you know? So, in a perfect world, right, we have this particular pattern, this market maker pattern that they like to repeat over and over and over again, right? Does it always play out like this? No, it doesn't. It doesn't always, you know, work perfectly like this. Sometimes they go one more level down and then give you a W, you know? But in an ideal situation, I want you to think about the weekly cycles of, you know, market maker, weekly cycle, accumulation, or level making. I think this is where the confusion came. You guys started counting levels and shit instead of fucking counting something else, right? So, and then you have trending, right? So, trending, accumulation, and market maker, right? So, here is where it comes into play. This is what I believe. When you talk about market maker cycles, weekly cycles on a bigger picture, they would essentially help create the peak formation lows and peak formation highs. The trending cycles, the trending weekly cycles is basically what this is. And then the accumulation level making cycle is what these are. Does that make sense? Does everybody understand that?
Yes.
Yep.
So if you're having accumulation for the whole week and you're just doing nothing but moving sideways, guess what essentially you're doing on a bigger time frame? You're literally creating and working out a level for them on a bigger time frame. Whenever you see a trending cycle for that week, Monday through Friday, guess what? You're in one of these on this pattern. And when you're doing a market maker cycle, the likelihood is that you're doing one of these on the bigger picture. Okay. So for you and for since you're trading intraday and you're going to be out, you know, within 4 hours or whatever the case may be, learning to understand the weekly cycles Monday through Friday is going to be way more helpful for you starting out than levels. Levels is going to take probably the longest for you to learn because it's very subjective to what you're actually seeing. I can show you a chart and I can tell you, draw me the levels, and I could have 10 different variations of what you see as levels. Another disadvantage that you have is that with levels, you don't know how long that level is going to be held for. You don't know how many traders they need to trap before they make another move. Right. And so that doesn't give you an advantage. The only advantage, the main advantage that levels gives you is essentially that it allows you to know the bigger picture and directional bias. Okay. So, with that being said, do you have any questions? What are the questions from this week?
I got one or two questions. First is, does it matter what for a normal cycle to occur, doesn't matter what Sunday and Monday does.
No.
I know it's a one directional move on Tuesday, that's the
Yeah.
confirmation, but Sunday, Monday, sometimes they seem like they go up and down, but Tuesday one directional, and then you'll see the reversal. Does it have to certain rule to Sunday, Monday?
No, there is no certain rule to Sunday, Monday, because you'll see on Sunday, Monday, sometimes you'll see them go up, and you'll see them go up Sunday, and then you'll see the reversal, or you'll see them, go sideways, and then Tuesday comes and you'll see one direction, and then you'll get on Wednesday the reversal. So no, Sunday, Monday won't give you a play essentially on picking out market maker cycles. What does give you a play, obviously, is what happens on Tuesday. So yeah.
And what about the level cycle? Sometimes I see that Monday might be coming from, let's say, a trending cycle, and then Friday it leaves the accumulation cycle. Is that still considered accumulation cycle?
Say that one more time.
So accumulation cycle is one that bounces range to range,
Right.
right?
Right.
And sometimes Sunday, Monday, or even Friday, it will leave that range, but it would still be considered a accumulation cycle.
Yeah. So what you'll find is on accumulation cycles, um, Friday could be a day that they use to basically set up the following week. So you'll notice that, Monday, Tuesday, Wednesday, Thursday, literally it's just working a range the whole week. And then all of a sudden on Friday, it breaks the actual structure of either support or resistance that's been ranging the whole week. And that's basically done to set up the next week.
And Monday coming in strong too. So Friday, let's say it leaves the range, and then Monday it comes into the range. That would also be part of the accumulation.
Yeah. So think about it like this. So stuff like this, if you look at, like, let's say this particular week here, what I don't want you guys to like get too concerned with is stuff like this. So the entire week, right? This is worked out in a range. And then all of a sudden one day it does this. If you go up to a higher time frame like the daily, all the only thing that you're going to see is basically this. Do you get what I'm saying? So this here on a 15-minute chart is basically this on a higher time frame. So don't let this movement here, kind of confuse the rest of the week that's perfectly been going back and forth, back and forth.
Right, as long as it returns back to the same
Correct.
level.
Yes, of course. It's got to return back to where it's what it's been doing before. Absolutely. Absolutely. Who else has questions?
Well, I had a few more. I'm just waiting for people to go ahead first.
Go for it, because your questions are answering a lot of mine. So
Mine too.
So for a normal, because I wrote these down, before the meeting today, but
Yeah, no, it's good.
normal cycles, they start off looking like trending cycles. Is there anything that we can do as of, like, to forecast a normal cycle or trending cycle
So
while
trending
it's happening?
cycles, yeah. So trending cycles, you would typically find that they break structure from Sunday, Monday on Tuesday fairly quickly. So you'll find that, let's say, Monday it'll be like this, right? And then on Tuesday it'll automatically just break out of the structure. They don't tend to basically stay within that structure because it's basically creating higher highs, higher lows, or lower lows and lower low highs. You know what I mean? So they're not the trend itself. The trending cycles don't like to stay within a behavioral structure like that. So those are dead giveaways there on Tuesday, you know, whenever it breaks outside of that Sunday, Monday. You see how this one here, pretty much stayed within that structure. So the fact that, the clues are literally what happens on Tuesday here. So on this one here, you didn't have a full day in one direction. You had this on Tuesday. So that automatically cancels out a market maker cycle, right? And essentially you can just draw a line and you know that if you're staying within this range here, then it's going to be an accumulation cycle. Also look at the EMAs as well. On accumulation cycles, the EMAs love to go through price. They're right here, literally going through price. On a trending cycle, the EMAs are going to be, down here and price is going to be up here and it's going to be bouncing off. You get what I'm saying?
Yeah.
So in this example on Tuesday, let's say it's bouncing off of the EMA there in the Asian session. When would you kind of be able to say, okay, would you wait basically until it's hit Sunday, Monday high and then breaks out of there before you would say that it was trending, or do you kind of have to wait for Tuesday to be over and see where it lands in
So
order to make the
this
call?
is so this is on if this is Sunday, Monday, right?
Mhm.
Look at what Tuesday does, comes back around, and the Asian range starts here and it ends here, right?
Right.
And then you basically have a type 3 that goes up, comes all the way up here. You see the spike that they make here. You know that they don't want to go any higher. So because of that, you know that we're not going to go and pass and break this.
Got
Because
it.
it doesn't pass and break this, we know that automatically, like trending cycles, not likely. We didn't have a full day of rise on Tuesday like we normally would want to have. So market maker cycle out of there as well. So it only leaves you with the accumulation cycle.
Okay.
The
So I'm glad
200
you
is
said that. So
the 200 is right
yes,
here going through price as well. That's another huge indicator because typically on a trending cycle you would have the 200 like and the 800, kind of away from price.
see, I would have started a count up there. Like I'm glad that you marked off those like the support and resistance levels to that whole accumulation because that spike up to the top on Tuesday and that drop down, I would have just started to count because it's 3 days. It looked like it's 3 days of drop.
Yeah, so I mean, look,
From
this is
Tuesday.
on a 15-minute chart. So look at, this is right at 7:45. They go all the way up here. This may only look like a small amount. It's about 14 pips that wick, but with the spread, it's more like actually maybe 20, 25 because it's pound AUD, so it's got a higher spread anyways. So they're basically reaching like all the way up here. They're reaching orders, buy stop orders that are here. You get what I'm saying? What are the questions?
Yeah, I also did see that if you look at the chart on the 1 hour time frame, it's a lot easier to get um, the weekly cycles.
Yeah, so I think one thing that's very helpful is the 1 hour time frame. Looking at the 1 hour time frame and cycles would also allow you to go back further in back in time as well if you're doing cycles as well. Because I think you can only do like 10,000 candles on 15-minute chart. So if you go up to a 1 hour chart, then that compresses. You can go back further in time to do it or whatnot. But I mean, I think that as you guys go through the course, it's very important for you guys to start to identify what are things that just click with you and what are things that don't. you know. So if you find, through week ones and two and threes that you're really, you can really resonate with like type 1 setups or type 3 setups or something like that, keep that in mind, because you're going to start to build your strategy, your trading strategy off of that. It's not about trading an entire, this entire system of type ones, twos, and threes and just trade whatever comes up. You have to build out a system that works for you, because this, what works for me may not work for you. What works for me and what I love doing is type 3 trades, but you may be just horrible at type 3s, and that's okay. But you may be really good at type 1s. You may be really good at trading accumulation cycles. You might suck at trading market maker cycles, right? I don't like trading accumulation cycles. I know Troy loves trading accumulation cycles, you know? So you got to find what works for you personally, because what works for me may not always work for you, because I just see the charts in a different light. And so that only comes with time and back testing, you know? If you go back to like your pairs and go on the 1 hour chart, and let's say you find that you like trading trending cycles, let's say, right? And that's your thing. You're pretty good at trading those, or you're pretty good at identifying those. Then guess what? The pairs that you trade, you might want to trade pairs that like to do that kind of behavior on a week to week basis. There's no point in trading a pair that doesn't produce the type of trading weekly cycles that you don't like. So if pound CHF likes to do accumulation cycles and you're more of a trending cycle type of person, then you shouldn't be trading that pair, you know? So that data of knowing what pairs like to do trending cycles or market maker cycles or whatever, it's literally all in getting the data from back testing. That's the part that nobody wants to do because it's the most time consuming part. Think about the power that you would have, or the edge that you would have if you knew certain things about these particular pairs. You know, when you're in a relationship with somebody, like, things about that person that 99% of the world doesn't know. You know, so you got to have an edge and you got to have an advantage, and that's the advantage right there, is knowing that the pairs that you are trading specifically like to do the behaviors that you like to trade. So if you like to trade, trending cycles, and you like to trade type ones or type threes, then the pair that you're trading better have, or must like, to do trending cycles, and must like type three setups. It only makes sense for you to trade the pairs that do that behavior. So that way you can have the trades that you want on a more consistent basis every week, in and out, in and out, in and out. Because it's not, then you're going to be, going from one pair to another pair to another pair. And that the one pair that you're looking at may only give you that setup once a month or twice a month or whatever, you know? We're looking for pairs that fit your style of trading, that are going to give you results over and over and over again on a consistent basis. Well, what's the only way that you would know if they were to do that or not? Right? The only way to know is to go back and back test and capture the data. So as you're going through it, start literally thinking about, okay, but during the homework, what was I really good at? I identified really good with type 1 setups, or I identified really good with type 3 setups. Or during during the homework of levels, I identified really good with levels instead of weekly cycles. 95% of you are going to be more good at identifying weekly cycles than you are levels. And that's what I've seen so far from all the different classes. There's a very small percentage of people that when they look at levels, they get it right away, you know? And so that's normal. What other questions? No other questions? You sure? Positive?
I think so. I think for me, sometimes I get the accumulation because sometimes the accumulation will look like it's trying to form the market maker. So I think just seeing some examples as you go through a week will be helpful. Just seeing more of it and getting more practice with it.
Yeah, so we're going to go through that right now. So let's do, let's start out a week here. And let's do, I don't know, let's do here. All right, so what we're going to do is we're going to replay the charts, but we're going to play what's that cycle? What's the weekly cycle? All right. So we're work our way through the weeks. Instead of looking for setups, right? We only care essentially about, can we identify what kind of a cycle that week is in? All right. So we're not worried about setups. We're looking literally for cycles. How can we identify cycles as it's playing out, basically? All right. So let's get playing here. So this is Monday. Yeah. Let's play this a little bit faster since
Previous week looks like a normal cycle, no? Or it could be accumulation.
this is actually an accumulation cycle. The reason it's an accumulation cycle is because it came all the way back up again.
Right.
It would have
right,
done,
right.
if it would have done something like this, let's say a type 1 here down, and then done like that, that would have been a market maker cycle. Because you had Tuesday all day rise, midweek reversal on Wednesday, and then another type 1 here, boom, and down. Does that make sense? But because
Right,
it went
right.
all the way back, it went right to the lows. You see that? And it went right back up to the highs. All right, so let's continue on here. All right, so Monday. So Monday, what I want to do is let's just pick out the highs, pick out the lows. So we have, something visual there to help us. Okay. And so let's see what happens here on Tuesday. So notice this is on a 1 hour chart. Notice the behavior that's happening here. So if we go back to a 15-minute time frame, it's coming out from the top. You see that goes right to the middle, bounces off to 50. You see that? Now the question becomes, this type 3 here, does it go up? does it go past and break past that high, right? That was made on Sunday, Monday. All right, so you see the high there, right? You see that big ass spike. This is 9 o'clock, so it's probably news in here as well. But you see the spike, and then now look at the behavior that's happening. Now we're basically we're trading or ranging right at the high of Asia, or at above the high of Asia, but also we got an EMA there as well, kind of holding price action there. Okay, we also got another one here as a backup almost. It's like a bodyguard and a backup bodyguard there. Okay. So let's see what happens here at the end of the day. All right. So you see how it went up and past it? What does that tell you?
That mean it's starting a trending then because it's past that?
Right. Well, so we're no longer, right. The likelihood of us being in an accumulation cycle is very, 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 very small. Right. Let me play a couple more candles here. Yeah. So the likelihood of us being in an accumulation cycle is very, very small. Now, the important thing is, how does this play out on the next day? Because, where are we in the next day here? We're all the way in the top half. You see that? We're in the top half of the initial, high or low of the week that was created Sunday, Monday. You see that? So we're in the top half of that. So unless there's a miracle that we get some kind of a trade here, like a type 2 or something that goes down, this is going to go up. You see that? And so that should give you already indication of what kind of a cycle are we in, right? We should already know what kind of a cycle we're in. It's going to end up being a trending cycle.
So if it would have went down, Mark, it would have been accumulation, because it would have been between that
If it
zone.
would have went down, yeah. So if they would have never, cross all this stuff here, and if it would have went down, so like basically, let's say around this, if we go back, and let's go back here so I can see the boxes. So like I was saying before, this would have been the high here would have been like a type 2 setup, right? Type 2 setup coming down. See what I mean?
Yeah.
You would have been stuck in that range. And then obviously the EMAs would have been right there with you going straight across the price action. So now we're in, what is this, Thursday? Thursday. So now this is Thursday, clearly, right? We're in a trending cycle. So you have your directional bias, right? So here you have a first leg, big, huge spike up here. This is probably news again. Comes down to that same area, bounces right off. This is what, Friday? And look, Friday, you don't even get a chance to trade anything on Friday. It's way above the range. You see that? So this right here on this week is a trending cycle. Make sense?
Yeah, quick question.
Yeah.
Can a weekly cycle be both accumulation and trending, or that
No,
wouldn't be valid?
it's either one or the other.
Oh, one or the other. Okay.
Yeah, it's either one or the other. I think sometimes you may get confused, and I saw this on some of the examples where, let's say, if we're playing out, if these are the weeks here, right? This is Monday through Friday, Monday through Friday. Let's say this week you have an accumulation cycle, right? And they're not done collecting contracts. They keep going for an extra 2 days. Then you'll see them drop, and then they'll start to accumulate again, right? What kind of a cycle is that?
It'll still be accumulation, wouldn't it be?
Right. So the point that I'm bringing up is that, sometimes, well, what they'll do to basically throw off everyone is they'll run the current cycle for an extra 2 days into the next week. And then you'll see something like this, because I saw it on some of the examples that you guys turned in for the homework, right? Where it literally went 2 days in and then boom, dropped and then accumulated again for the next week. And then the next week they went in and completely accumulated the whole week. And then Friday following is when they started a whole brand new cycle. You know what I mean? You'll also you'll see stuff like this where it'll be trending, and then they'll trend up for an extra 2 days, and then on Tuesday they end up dropping like that. And all they're doing is finishing up the trend from the previous week and then just starting a new one.
So that would be considered a trending cycle.
It'd be considered a trending cycle because just because you have a reversal here and you trend the rest of the week, you didn't have a mid-week reversal. Tuesday is in the middle of the week. You know what I'm saying? So you can't say that's a midweek reversal. It's not a midweek reversal if it's Tuesday. It's only the second day of the week. You get what I'm saying?
Mark, then in this example, what would it still be a trending cycle if that Friday were to go strongly bullish and break the cycle? So like it's almost like the midweek reversal happened on Friday, because I see that sometimes, so that's kind of confusing.
So you're talking about this Friday here? Or
No,
this Friday down
that
here?
one, yeah. Say that one went strong bearish and it broke the top of that cycle.
All right. So you're saying if this one went strong bearish.
I'm sorry, bullish.
I'm sorry, bullish. So this went bullish on Friday.
Yeah, and it broke the top of that cycle.
And it broke the top of this.
Mm-hmm.
So like this?
Yes.
Would that be still considered a trending cycle?
Correct.
So the answer is yes, because the majority of the week was trending.
Okay.
Yes.
Okay, thank you.
I'm still lost on why like Tuesday can't start the peak high right there.
Why Tuesday what?
Why Tuesday couldn't like be the start of the peak high of Monday. They rose up, so I would think that would be like the fake move for them going up Sunday,
Yeah.
Monday, and then Tuesday. Like I don't know, cause just seeing some pairs, I think I was confused because I would think that like I've seen when I was back testing, I see like Monday they'll come in, do a spike to the bottom, then they'll come up, and then Tuesday they will come down and do the other spike and then start the trend. So in that case, like I would think that like how you showed it, you was like it rose up on Monday, and Tuesday it would start the trend going down.
Yeah. So listen, there's different variations, right? So what you're talking about right there is the variation that's, like, I want to say, I don't want to say common, but I want to say the most like known, right? Is Tuesday having a false move like this, and then or Sunday, Monday having a false move up, and then Tuesday coming back around, testing that same high and then dropping, right?
Yes.
And so the way that this would be like a market maker cycle would be if it comes down on Tuesday, and then on Wednesday it makes another reversal, and then Thursday it makes another push up, and then Friday it's either goes sideways or making another push up.
Yeah, because I seen Travis was talking about that in his the end of the video. It has
Right.
the double, like, and that's what I was confused about, like it doing two reversals or something like that. Like,
Yeah, so when you have something like this is the most like the one that I think everybody is looking for, right? The problem is that it's not something that they always make, because if it if it did, everybody would freaking trade, and everybody does trade it, you know. I know
yeah,
people that just literally only trade on Tuesdays looking for this trade. Now imagine that. Imagine you trading just on Tuesday. All you're doing is looking for this, right? I mean, you can literally make a system, right, just for trading on Tuesday for this specific setup. Now, for this to work, obviously, then you would need to open up your palette of like literally, looking at like 15 to 20 pairs. You know what I mean? Because now you're looking for something very specific. Now you're looking for, like, let's say Sunday, Monday false move, and then you're just looking for Tuesday to match that high and then drop. Or, let's say Sunday, Monday you drop, and then on Tuesday you're looking for a match of that low and then rise. You know what I mean?
yeah.
I know people that just do that trade only. And if that works for them, that's fantastic. That's great. Like, this thing is so big that you can pick and choose what you want and what you're most comfortable with. The problem that most people have is they don't have the patience to wait for this. Do you get what I'm saying? They don't have the patience to wait 3 days a week, whatever, for that setup to happen, because they
I know I
feel,
don't.
yeah, you feel you have the 9 to 5 mentality, so you feel like you're wasting your time, right? But what if I told you that when you did see this trade, and when you did take it, right, it would basically make up for all those days that you didn't trade. You know what I mean? That one trade would make up for all the days that you missed. And not only that, but also you got to think about it. Now you're opening up yourself to all these different pairs, you know? Think about how easy, like, it would be for you to scan like 20 pairs if you're looking for that setup, specifically. You're literally going Euro J, Euro pound. Did it make a false move Sunday, Monday? No. Okay, next. Did that one make a next move? No. Next, next, next. You know what I'm saying? You pretty much within 2 seconds, you're literally going through these pairs, and you're like, okay, this didn't make it. This didn't make it. This made it. All right, this one made it, and this one made it. You know what I mean? So now you're focusing on just 3 pairs. Out of those 3 pairs, which one is going to make that move that you're looking for? You know what I mean? So, I mean, everything could be literally customizable to you specifically. So it just depends on the person itself, whether you have, the patience to wait it out or not, you know? And I mean, the best thing that I can tell you is like, stop thinking of it as a casino and start thinking of it like a business, and start thinking like every trade that you make, think of it, instead of, having, $50 on the line, think of it like having 50 billion on the line. how different would your mindset be if you just had $50 versus 50 billion per trade?
Don't tell me that, Mark. I'll never trade then.
I'm just saying, like,
Right? I
like
was thinking the same.
the
Wait a
mindset
month.
itself that of having all the I's dotted and all the T's crossed is much more amplified. You know what I'm saying? So like every time that you look at a trade, like, okay, does it have this? Does it have that? Does it have that? You know what I mean? You're really looking at it and you're trying to see, okay, which of these pairs is going to give me, shows me the most evidence that I want. And that's the main thing that I want you guys to understand, is that you don't have to trade every single day. Like you literally are concentrated on looking for the right setups that you know that you've seen over and over and over again. But guess what? The only way that you've seen those damn trades over and over and over again is when you backtest. It's the only way. And that's the part that nobody wants to do. And that's why there's a high failure rate in the business. That's why. Because nobody wants to do it. I don't blame them. But nobody wants to do it. So that's why there's an extremely high failure rate. Even for people that take the course. You may not want to do the homework. You may just want to do videos only, or you may want to just watch videos only. But if you don't do the homework, it's not going to sink in what you're trying to capture. You know, it may not sink in what you're trying to capture. All right, so we just had a trending cycle for this week, right? So let's see what happens Sunday, Monday. So here, let's move this up for Sunday, Monday, which is here and right here. And so if you look already, like we're not even out of the Asian range. And look what price action is doing essentially. I mean, that right there, if you look on a 15-minute chart, that's like your perfect pattern right here. It's a multi-session M. First leg here, second leg here, and you get your crossover here. So now, if you think about it, look what happened on this is Tuesday, right? So did you get a full day of rise on Tuesday? You didn't get a full day of rise because you reversed on Tuesday during the New York session, right? So we passed the high of Sunday, Monday, but we failed to make a full day of rise on Tuesday. So what does that mean? If we don't have a full day of rise on Tuesday, right?
Either trending cycle, yeah, trending cycle.
Well, not
It might
necessarily,
come
because that
down
could
to
also
Tuesday.
mean the market maker, right? Because it could be reversing on Tuesday and doing 2 or 2.5 days of bearish.
Well, the thing is that you didn't have a full day of rise on Tuesday. You only rose for the London session, and then you dropped again for the New York session. You know what I mean? So you didn't have a full day of ongoing, moves in one direction. So it's definitely not a market maker cycle, because Tuesday automatically knocks that out. So it's not a market maker cycle, and we've already gone past Sunday, Monday high. So the likelihood of that being an accumulation cycle, not very high either. So let's just move this up and let's see this real quick. Let's fast forward this real quick to the next day. So you see it went down and then now it's trending sideways here. Let's see what happens. You see how the 50 is above price. That 50 is going to act as resistance. I can probably tell you that much.
Mark, I still have a question about Tuesday, unless you want me to wait until the end of the week.
Yeah, go ahead.
Okay, so I'm kind of confused now because in the videos you talk about for the maker cycle, you can have Sunday, Monday, and then the first part of Tuesday be like a strong bullish fake out in this case, and then you can have your Tuesday, Wednesday, Thursday bearish. So you have your 2 to 2.5 days bearish, and then you have the midweek reversal. So why is this one not a possible market maker cycle up at the top there? How do you know that? I'm confused.
Well, I'm going by what price action did on Tuesday. And the fact that price action, instead of having a continuation trade, like let's say a bounce off the 50 and continuing to go higher. So if this would have went higher, if this would have went like this and went higher, I think for me that would have confirmed that that would have been a trending cycle, going up obviously. But
Okay,
it didn't do that.
uh-huh.
It went straight back down and now we're kind of all the way back to where Sunday Monday's high was actually.
Okay, so you are saying this looks like a market maker cycle, right?
No, I'm not. This is
Okay.
not a market maker cycle. No,
Okay.
it's not.
All right.
Because
So
if it
why
was,
is it not that?
if it's not a market maker cycle, it's not a market maker cycle because we didn't have this happen. We need a full day of rise on Tuesday.
Okay.
And Tuesday is the day, whether it's a market maker cycle or not. If
Right.
it's a full day of rise on Tuesday or a full day of drop on Tuesday, then you can't count out the market maker cycle. But if on Tuesday you don't get that, the market maker cycle is out. It's no longer an option.
Got it. Okay. I thought that could happen in the middle of Tuesday where it broke down, in this case, bearish. Okay. I gotta go take my note.
So now if I'm looking at this, I mean, to me, just looking at the bigger picture, this almost looks like a peak formation high right here. Let's go back to the 1 hour here. So on the 1 hour, I mean, we're getting kind of like, advanced where you could see there's one here, there's another one here, and then that could be a peak here. If this right here is a peak. But let's see what happens here on this day here. Yeah, so if we go back to the 15. Yeah, so look what happens here. This 50 is going to act as resistance, and it's probably not going to allow price to get up to the middle of the range. It's going to probably block it. Yeah.
I see EMA, the 800. That's the 800, right? The dark one you have.
The 800 is down here.
Oh, that's the 800. And
Yeah.
then the 50 is the bright one, and the one in
The
the middle.
50 is here, and the 200 is here.
Oh, that's the 200. Okay.
Yeah. So I mean, this looks exactly like literally what I just talked about when they run up the previous week into Tuesday and then they drop. You get what I'm saying? This literally looks just like trending cycle that goes an extra 2 days, and then on Tuesday they reverse and they drop the rest of the week for a trending cycle back down. If that's the case, that if that's the case, that 50 won't get penetrated at all. Like price won't even try to mess with that 50. You see I bounced off the 50 there. There's another type 3 setup there. Yeah. That was another type 3 setup. Was that Wednesday or Thursday or something? This is Friday coming up. See? There's the first leg here, second leg right there, and then there's your drop. Look at that. All day. That was like 150 pip drop.
So this week would have been considered a trending cycle.
It's a trending cycle, yeah. Like I said, this week they ran it up an extra 2 days and then they literally just dropped it. This is very popular on this right here. What happened on Tuesday and stuff is very popular on Euro JPY. I think Travis, don't you trade Euro JPY? You tried that, right, Travis?
Yep, that's my jam.
Then do you see this a lot on Euro JPY?
What, like trending cycles? I'm sorry, I wasn't paying attention.
This right here, this extra 2 days, the reversal basically on Tuesday.
Yeah, so it usually lasts like Euro JPY 2 to 3 days, and usually the reversals are on Wednesdays and Thursdays. Tuesdays, not as much. But if it happens, it happens. But I mean, that's what I've seen.
All right, so now this is what, Friday. So now we're going into another week, right? So let's play this Sunday, Monday out. All right, so Sunday, Monday, let's put in these highs and lows here. So I said, notice how Sunday, Monday is pretty much all in one direction, right? So Tuesday, we'd like to see either it's a reversal or it's just going to keep going down. One of those two things, right? So if it keeps going down and it breaks past that, likelihood is it's a trending cycle. Because we're already coming off of a trending cycle anyways. So there's Tuesday. Straight down. It didn't even waste any time at all. I don't even think you got a setup out of it. I did. You got a type 3 setup out of it here. So you get a type 3 setup out of it, pinning to the 50. That's the trade right there.
Type 3 setups are what I'm looking for one directional move on Tuesday.
So I mean, if you like to trade, if you find out that you want to trade trending cycles, then type 3 trades are probably going to be your thing. Especially when they bounce off the 50 like that. It's just pure gold. All right, so let's see what happens here on this. This is what, Wednesday. All right, so that's Wednesday. So are some of you thinking at all that this might be a market maker cycle?
Yeah.
Okay. So the way that I can tell that this is not a market maker cycle is because if you look on the 1 hour time frame, these EMAs have pretty much crossed over the 800 here, the 50 here, the 200 all the way up here. So ain't nowhere even close to that, to where price action is, right? So you have a cross of the 800 and the 50 here. And as long as that 50 is not crossed in the 1 hour time frame, there's no way you can have a market maker cycle. Okay, so look at on what is going into Thursday. So going into Thursday, if this is a market maker cycle, you should have a buy, right? You should have a buy set up on Thursday. There you go. See? Type 2 setup on Thursday, pinning on the 15-minute chart to the 200 here. You see that? Boom, boom. You get 3 legs on that. Straight down. Then now we come to Friday. And so Friday, it's either another sell setup or, you know, nothing but like literally sideways movements, essentially to set you up for the following week. Does that make sense? So we'll see what happens here on Friday and see if they decide to give you anything like that. So far you've been ranging pretty much within that 36 pip back and forth, back and forth. Yeah, so you didn't get a lot on Friday. There is a setup here on a 15-minute chart, which is this is the first leg here, railroad track, 2 candles over, and then you get a price drop. The problem is that this is probably way too big to get into a trade. It's like over 20 pips big or so. So not the ideal place. So now you go into the next week.
So that cycle was also a trending cycle.
Correct. Yeah, with a trending cycle, yes. you'll start to like notice things about trending cycle, especially if you do it on a 1 hour chart, like how they don't like to pass the 50 on a 1 hour chart. These things you only get them through back testing. This is the only way that you learn these little things. And these little things that you learn through back testing, that essentially is your edge. That is going to be essentially your edge. All right, so all right, so Sunday, Monday went all the way up, right? Pretty much one way move and then kind of retraced a little bit. I think the most important part that I get out of this is the fact that it went above the 50, right? So went above the 50. So there's your range, let's say, for Sunday, Monday. Okay. So just pay attention to this. Why would this be breaking right off the 50? You know? Why would that be breaking right off the 50? These are things that I think about. Why are these things breaking off the 50, off the middle of the range, and then obviously the 50 is right there. And then look, goes right back to the middle of the range and then jumps right back up. The question is, why would they do that? These are things that you got to ask yourself. Why would they do that? There's a setup here, by the way. I think it's a multi-session, I believe. Multi-session setup here, right? So there's a setup here that you can take. But as far as weekly cycles, you got to start asking yourself, why would they do that? Why are they not wanting to pass the middle of the range? You know? And for me, it's because they don't want to come down here at all. You know? That's not what they want to do. They don't want to come down here at all. And so, look, you're trading. You go into Wednesday and you're trading already above the range of Sunday, Monday. Look, keeps bouncing off the 50. Like, you should already know what kind of a, cycle this is going to be for that week. See how price keeps bouncing off the 50 there. Went all the way up, came back to the 50, bounced off the 50 again. This is, what is this, Thursday? Yeah, see? This is already... What is it doing? It's a trend, right? It's a trend. It's another type 3 trade there on Friday, probably. No.
The cool thing about this is that you see the trend forming before it becomes obvious.
Right. Yes. That's a good observation. I would say is that you see the trend forming before it becomes obvious. So that was another trending cycle there. So far you've had literally four trending cycles in a row. 4 trending cycles in a row on one pair. Very interesting. Questions?
Man, I've been stressing myself looking for levels, man. I'm gonna kill it with the trending cycle, man. Off that 50. For real, I like the stuff you've been doing, man. Like you just did. Like I just been killing myself looking for levels. And GBP USD is like one of my favorite pairs.
Yeah.
You know what I'm saying? So if that pair trade, you know, I mean, like the type 3s and type 2 setups, yeah, I think that's gonna be easier for me.
Yeah, I think
And
that if you find it very
something-
hard, very difficult, kind of like take a step back, right? Don't stress out about it. You know, it's like starting a new job. You know, you're not going to know everything right away. You're not going to know everything after a week. You know, but after how well, think about this: if you start a new job in an industry that you've never been in before, you know, when you first start out, you're going to suck at it. That's just anybody's going to suck at something that they've never done before. But once you start doing it and you start getting, you know, start going into work every day, you're going to get better at it. You know, 6 months, 8 months, a year down the road, you're probably going to be the ones training new employees coming in, you know? So literally everything is just about time.
And if it helps, actually, pound USD is actually a perfect pair to trade. If you could go back to 2019, it done nothing but levels for that whole entire year. So if you want to really see like nice clean playouts, I would say go check it out.
Like if you had to pick, if you had a like gun to my head and tell me what's the best pair to trade, you know, I'd probably trade GU. You know, just trade GU. And that was one pair out of all of them that I had to trade. Is either going to be, for me, it's either GU or gold. That's it.
And probably what we could just start doing is I started putting the dollar index into our FXN trading chats, and usually, well, what happens is because it's a major pair, whatever that the dollar index does, basically the opposite happens with pound USD. So that could help a lot with, in terms of additional clues that could give you an idea of what to do in terms of taking a setup.
Yeah. So, I mean, a very simple thing, you know, is the fact that if, you know, for the past, I don't know, going back to President Carter, whenever that was that in the 70s or 80s or something? Whenever that was, at least that's as far back as I can go on this chart, is you've had a situation where every time that there's a, you know, Democratic president, dollar value goes up. So I am expecting this value of this dollar to go up over the next 4 years. So if that's the case, then, you know, GU, for example, should go down at some point. Should start going down at some point. So whether it be up here or wherever, you know.
I have a quick question following up on that. So would fundamental indicators such as what you guys are talking about, currency valuation or fundamental equilibrium help with directional bias over time?
I think in the bigger scheme of things, the problem is that the directional bias that you're talking about is 4 years out, right? So
Right.
you're not talking about like tomorrow. You're talking about like 2025 or something. You know what I mean? You're trying to project it out to 2025, you know? And so for me, I think that this has one more small little correction to do to this point here, because it really didn't make it all the way down, you know. So I think once the stimulus comes out, it'll come down here and then you'll see a full rise, you know. But I do believe, I mean, the patterns from like the 70s are there, you know, to follow. So this is from like 86 or so. Like I can tell you who was president just by looking at the chart, like right now, you know. I mean, Obama's here, Trump is here. This is all Bush right here. Before that was Clinton, you know. So all the signs are there, man. So we'll see what happens. But what other questions you guys got?
Would I have to look at the pound index just like you're looking at the dollar index right now, to see, do kind of the same homework that you did on the dollar index?
I would say,
you can, but I've never looked at the pound
yeah,
index a day in my life, so I don't know.
to make your life simple, honestly, you just need to just look at the dollar index. Like, because basically the dollar index is major pairs, right? So like that moves most of the currency pairs. Like I wouldn't waste time like trying to figure out like the index for like the yen or anything like that. Like I feel stick to the dollar index and pound USD. Mostly I feel like that has the best results from what I was seeing. But feel free to try. I will not stop your mind from expanding, but for simplicity, you know.
No, right, I get it. I get it. The dollar index is like, I guess it's the leading currency, right?
Yeah, well, the dollar is major. Yeah, the major currency pairs. So it's like you will see like majority of the time when you see the dollar index go up, you're gonna see USD CAD move. You're gonna see a lot of things. So that goes more into like pair correlation and all that. So like if you look at this week's post on the FXN chat, like literally you can see like what the pullback that happened. Look at the pullback and look at pound USD, and you'll see it. Yeah, the pullback on dollar index and then pound USD should take off.
You can also overlay both of them too if you want.
Yeah, you could.
Where's it compare? Yeah, you can put GU. However that works. That's probably because it's so big.
Yeah, I'll be trying that correlation. It'd be like,
But there's.
No, it seems like everything is reversed.
yeah. So you see, they're inversely correlated. So you see how they move opposite, which makes sense.
So.
And they're correlated most of the time because they literally mirroring each other. like probably you'll see at the end, like all the way on the left, like it's like a little bit of it's not that correlated, but majority of that whole thing is correlated. Like because, well, I mean, inversely correlated because they're flipped. Literally mirror image.
Yep. So
yeah, anytime you're not sure of a setup, you could go to the dollar index as a reference. It's a very good trading tool.
cool. All right. Well, you guys enjoy the rest of your night. And
right.
Mark, real quick, just so you know, I dropped a question in the group just because I wanted to show you the image related to what you were talking about earlier, and then with the video from last week. So just so you know what that was.
So the images are from, yeah, I got you.
So if you don't want to answer it now, that's fine. But just so you know what I was talking about.
Okay, I got you.
So Mark, when y'all back test, how far y'all go back? Like a year? Just keep
far
going
back as you
to that
can. As far back as you can.
Okay, cool.
So, I mean, if you have, I think you can go back like 10,000 candles. So typically, I wouldn't say it's like a year and a half that you can go back on TradingView. If you have if you use MT4 and you have that soft Forex software, you can go back like 10 years. So you can go back 10 years on that software.
Hey, Mark, one last question before we just head out. You know, like when you look at the dollar index and you see, you know, you can call out where Trump was, Obama was. Those are all like fundamental bases of this whole thing, right? Is there anything else that, you know, such as like fundamentals, you know, I'm not sure how to ask this, but you know, I know Canada's currency is linked to oil, you know, certain commodities, other currencies.
I mean, if you're talking about what they're tied to, obviously, you know, Canada's tied to oil. Australia's tied to gold. You know, so U.S. is tied to presidents, I guess. But I mean, I just honestly, bro, like I don't try to get too crazy into it because then you're like, I think at some point you're just going way too far into it. You know what I mean?
Right. I might be in too deep.
It's almost like you're trying to find, you know, something else deeper and stuff like that, you know?
Like I had a hard time picking my pairs. Like what you call that? Like fractional disparity. What they say?
Fractional
You like, yeah. When they picking it, like that's why I had a hard time picking my pairs because I like the GU and you know when you learning like the regular trade, you know the retail trader thing, they always say like pick 1 or 2 pairs. You know what I'm saying? And with this, you know, like you said, you got to have a little bit more pairs. You know, because you can't be stuck on one pair if they work in another pair. You know what I'm saying? So that's what I'm probably having a hard time just sticking with my 5 pairs. You know what I'm saying?
I think it's
having,
honestly because you may want to, you may feel like you have to trade every day. You know,
that's probably
you're trying to find a trade, and so that part of it, I mean, it's just a mindset. You know, honestly, it's a mindset of to me at least, I think it's a mindset of working, you know, a regular job for so long, for all of your life, like all of us do. and we just know that, hey, we work 8 hours, we're going to get paid for the 8 hours, you know. And in this case over here, you necessarily don't get paid for the 8 hours, you know. But it's almost like when you do get the trade, and you wait for the right trade, it's like you get back pay with it. You know what I mean? So see, I think it's all about just taking the time with it. So that's it. All right.
Thanks, Mark.
You're welcome, man. You
Shane,
guys have a good one.
Thanks, Mark.
Be safe. All right.
Thanks, man.
Enjoy the rest
Thanks,
of your night.
bye.